Hello and welcome to our video series GST for Businesses. The first video in this video series will be basics of GST. We would like to thank Mr. Vaneet Makkar for his knowledge and information assistance on GST. You can send us your queries at our email address. This video is just meant for your general information as business owners. It does not form a substitute of legal or professional advice. If you notice any errors, we would like you to inform us of the same. We will now begin with our topic, basics of GST. Goods and Services Tax is a nationwide indirect tax that will be charged on supply of goods and services under one unified scheme. GST is a comprehensive indirect tax, and taxes such as central excise duty, service tax, VAT and others will be merged under it. Let's understand the term supply of goods or services. Supply includes transactions such as sale, transfer, barter, exchange, license, rental, lease, or disposal of goods or services. Even stock transfer between branches in different states of one enterprise is a taxable event. So if you have a branch in Delhi and transfer the stock to your branch in Jaipur, it would be considered as supply and thus be a taxable event under GST. Let us now understand the key points of focus under GST. The first one is the reverse charge. In reverse charge, the liability to pay tax is by the recipient of goods and services instead of the supplier of such goods or services. One instance of this would be when goods or services are purchased from an unregistered dealer. For example, you purchase tea from an unregistered dealer. The tax payable on such goods will be payable as a reverse charge by you before claiming it as an input credit in your business. The rest of the instances of reverse charge are covered in another video later. The second key point of focus is advance received before supply. Advance received before supply is taxable on receipt. However, tax is adjustable at the time of actual supply. Tax paid on advance can be claimed by payer of advance on receipt of supply. Now let's see how taxes are divided under GST. If supply of goods is within state or union territory, the three taxes applicable are CGST, that is the central GST, SGST, that is the state GST, and UTGST, that is the union territory GST. IGST is integrated GST. It is applicable on interstate supply of goods or services. It is adjustable against IGST, SGST or CGST on further supply. Now understanding the IGST in depth. IGST is on supply from one state to another, a state to a union territory, and one union territory to another union territory. The interstate supply of goods or services will be taxed under GST at the full rate specified by government under the category code of tax rates. For example, fabric will be taxed at 5% IGST on interstate supply. Now coming to CGST, that is the Central Goods and Services Tax. It is applicable on supply from one place to another within the same state or within the same union territory. CGST will always be a part of tax along with SGST or UTGST, whichever is applicable. The SGST will be charged on supply from one place to another within the same state. The UTGST will be charged on supply from one place to another within the same union territory. The rates of CGST, SGST or UTGST are given as under. CGST will be at half rate specified under the category code. SGST or UTGST, whichever is applicable in the case, will be at half rate specified under the category code. Combining these would be the total GST for supply within the same state or union territory. Now coming to the returns to be filed under GST for a general dealer. The return of GST will be filed on a monthly basis for detail of each month, and one annual return will be filed reconciling the yearly data. The dates for the monthly returns and the annual return is specified in the PPT. Like and share our video and subscribe to our channel to get future videos on GST on topics such as registration, challan, billing, reverse charge, etc.